Agarwal, the whole-time director, is now with us. Mr. Agarwal, hi. Thank you very much for joining in. You know, I just wanted to start with the fact that you guys are all working in a very competitive environment where prices are much lower in terms of cost, and it's possibly getting even more competitive because there's a lot of shift from the unorganized to the organized segment, plus maybe distribution's gotten more efficient because of the online segment as well. From that perspective, can you just tell us how lucrative maybe the margins would be, say, in the next couple of months?
See, margin is all a outcome of how you control your cost, because ultimately we are not selling commodity, we are selling a brand. So we keep our control on our cost, and margins is market led in the sense we are always somewhat higher price than our competitors in the same segment. So our margins are always better than our competitors.
All right, Mr. Agarwal, if you could give us a sense, what will be the growth outlook that you're looking at for FY18? I heard one of your competitors, Mr. Gupta, I think, talk about GST being a big factor. That could help, you know, better growth for the organized space. For the 9 months of this year, well, you've not done any growth, but you definitely must be penciling in some kind of growth for FY18. So if you could give us some guidance over there. And also in terms of margins, can we hold on to these 14% margins that you have been doing?
See, as long as turnover is concerned, we aim at achieving a 15% plus growth in this fiscal.
All right.
And as far as margins go, we aim at achieving 1% plus both in the EBITDA and the PAT also, both.
All right.
Okay. Mr. Agarwal, you know, I just actually wanted to come back to the fact that, fine, you would be competitive because you're controlling your costs. But there is also more competition which is actually coming into the industry. So from that perspective, you've already tied up with two companies. You have a tie-up with FC UK plus with Fruit of the Loom. Do you think that that might be the way to go going forward, a differentiation strategy which would involve tie-ups of different kinds?
When you say talk of competition, so we have to be ahead of competition. So these two tie-ups were a step in that direction. And then secondly, we are again also looking for a tie-up in the women lingerie segment.
Can you give us more sense, more perspective on that?
Nothing is concrete as of now, but then we are still scouting. We have not zeroed on anybody. But then we are seriously scouting for a tie-up in the women's lingerie segment also.
American brand or European?
It might be a global brand. Maybe it's an Indian brand also.
Yes, but Mr. Agarwal. Mr. Agarwal, I wanted to ask you on that actually.
Yeah.
Have you been in talks with any of the domestic brands for some inorganic growth? If you could tell us, you know, there are various...
there is nothing concrete happening, and it would
but have
not
you
be
been
right
in talks with
name somebody. But then we are seriously looking at something,
and in case you're going in for that, then how would you fund it, sir? Is your, how does your balance sheet look?
Funding would be by way of loan or some part of the funding would be through internal accruals, but most of it would come through by way of loan or some bank finance.
And what could be the acquisition size, sir, in case you're looking at something? I mean, you would have some kind of ballpark number with you.
It's too early to talk on that because it depends on the opportunity. So anything between 100 to 400 crores.
100 to 400 crores is quite a range. So is it a partial stake or is it an entire stake, a complete buyout?
No, but as I said, we are still scouting, so it can be a partial or because nothing is concrete as of now. And we have not zeroed in on any company. So that's a management's target of the kitty what they have, thought of.
All right, we'll want to drill more into that. But sir, since you're giving us no details, give us a sense of your business. What does exports contribute in terms of your total revenues?
Export is very, very negligible, which is around 2.5% of the turnover. But then going forward, we aim at bringing it up to 10% at least.
Oh, why are you going towards exports? Is it better margins, or you just want to expand your geography?
It's even better margins, and then you open up a new market. So
okay. And what about geographically? How? I mean, where have you? I think you have presence in north as well as east. Are you looking at the south? Are you looking at any other parts?
South
of the country?
We are strong in Karnataka. Okay. Tamil Nadu and Kerala we are not strong. Where we by this year only, this fiscal only, we aim to have a good foothold there also.
Okay. All right, Mr. Agarwal, we're going to let you go on that note. Thanks